Hello everybody, welcome back to the channel. I am Rida and today we are going to learn about one of the most important subjects in business and commerce, and that is accounting. And if you are from a background of engineering, medical, art or any other than commerce and you wanted to start your journey in ACCA, so you need to understand this basic concept of accounting. And this gonna be a series which I am going to start from today. So let's get started. So accounting can be defined as a process of recording, classifying, summarizing and interpreting financial information. In simple words, accounting help us to keep track of all the money come in and going out of the business. Just like we maintain personal records of our expenses, a business also need to maintain systematic records of its financial transaction. Accounting provides this system, right? There are many different systems which companies are using nowadays, like ERP system, SAP, Tele. So there are so many, QuickBooks as well. So it ensures that we know the financial health of a business and can make informed decisions. Now let's focus on the financial accounting. Financial accounting is a branch of accounting that deals specifically with the recording and reporting of financial transaction of a business. So there are many types of accounting, but in financial accounting level 1 of ACCA, it is basically theory plus figures. You have to learn the theory as well, and you need to practice with the figures. So its main purpose is to prepare financial statements such as the income statement, which we also known as the statement of PL, profit and loss, and the balance sheet, which is now has another name, which is statement of financial position. It tells us the business position, which show how much profit or loss a business has made and what its financial position is, right? So the key users of financial accounting information are external parties like investors, creditors, banks, regulatory authorities, public, customers. So there are so many shareholders. um, they rely on the accurate financial statement to decide whether to invest in the business, to lend the money or extend credit. Now let's understand the accounting process, right? So accounting is not just about keeping records, it follows a systematic process. Let's go step by step. So here, as you can see, the first step is the source documents. Of course, every financial transaction starts with a document. For example, when we buy goods, the invoice is the source document. When we make a payment, the receipt is the source document. These documents provide evidence that a transaction has occurred. So this is the very important document for an accountant. Now the second step is to record it in the journal. Once we have the source document, we record the transaction in the journal, also known as the book of original entry, right? This is where the transactions are first written down in the chronological order using the rules of debit and credit. Next, the entries from the journal are transferred to the ledger. The ledger is a collection of accounts, like such as there is a particular cash account, then we have sales account, purchase account. So every account has a different ledger account. This process is called posting, right? And after it, we have a process of preparing a trial balance. After posting, we prepare a trial balance, and this is a list of all the ledger account balances. The purpose of trial balance is to check the accuracy of the double entry bookkeeping. If total debits equal total credits, we can reasonably confident that the entries are correct, that the postings were correct, right? From the source document till the trial balance, this process is also known as a bookkeeping process. So if you want to, start your career as a bookkeeper or a junior accountant, so you need to understand this process like a pro, right? Now, after all of these steps, all of these process, we have the fifth step, which is financial statement, right? From the trial balance, we prepare the financial statement, like statement of PL, right? Or we can say income statement, right, which shows revenue and expenses and the resulting profit or loss. Then we have balance sheet, which shows assets, liabilities and capital, giving us the financial position of the business at a particular date. Then we have statement of cash flow, statement of change in equity, and statement and notes to financial statement that we are going to learn further. So in easy words, I can explain you that what is the accounting process. The source document is like to identify the transaction, right? What an event has occurred, whatever the event has occurred, like we have purchased a furniture for our business, then that's an event, that is an transaction that has occurred in our business, right? So we will have a receipt or payment or like that, right? So that is a source document for us. Then we will record it in journal, and that is like books of prime entries, right? And then we classify it with the ledger accounts and the trial balances, and we will know that our postings are correct, debit is equals to credit. And then after all of this, we get the summarized report in a form of financial statements. Now before we conclude, let's understand the concept of books of prime entries. The book of prime entry are the first records of business transactions before they are transferred to the ledger. These include like a sales day book, right? Sales return day book, purchase day book, purchase return day book, and all of four them are only recorded if the transactions are on credit, right, or on account. After it, we have journal, we have petty cash book, and then the cash book, right? So the sales journal are to record all the credit sales, and if we get any return from that sales, we have to record it in the sales return day book. Then we have purchase day book. Like here we have to record all the credit purchases. If we have returned any of our purchases, then we have to record it in the purchase return day book. Then we have journal, like any of these items which are not which are not going to be added here or in there, so we will record it in the journal, like salaries, like wages, like rents and all that. Then we have petty cash book. It is used for recording small day-to-day expenses like small stationery, like snacks for our employees and all that. Then we have cash book, which records all cash receipts and the payments, whether it is cash in our hand, cash in the bank as well, right? So these books act as the initial point of entry for transactions and help in organizing information systematically before it goes into the ledgers. Now, to summarize, accounting is the language of business, and it helps us understand how money flows in and out of a business. Financial accounting focuses on preparing financial statements for external users, and the accounting process begins with the source documents and ends with financial statement. And books of prime entry are the initial records of business transaction. So by following this structured process, businesses ensure accuracy, transparency, and reliability in their financial reporting. So in our next class, we will take practical examples as well and see how these entries are recorded step by step. Thank you.